The market came roaring back today, bouncing out of our lower dealer cluster zone that we've been highlighting for the last three trading sessions, with the SPY up 1.88% above 593 here in after hours. If we look at the Qs, for example, up 2.31% on the day, including the after hours activity. Bitcoin up 3.43%. So a huge move all on the back of this morning's CPI numbers. So this bounce was to be expected. We had multiple areas of confluence, including previous support levels here just above the 575 to 580 zone. We bounced multiple times from these areas over the last month or so. The one point of caution, however, is that we technically are still in a downtrend. And so despite the past three trading sessions of higher prices, we are still in this downtrend. We're reaching into our upper dealer cluster zone, so we could see a little bit of consolidation, possibly a short-term rejection as well. This morning's gap up also left quite an empty zone between 585 and 590. So all things to consider as you're performing your own assessment of market action. The one thing I will note, and this is what we've been watching for the last week, is the gamma exposure at the 600 strike. This has been growing for the last several trading sessions, as we've been noting in our previous videos. We continue to see volume coming in at that 600 strike, and that is translating into open interest and eventually gamma exposure growing here at the 600 strike. So if this downtrend can break to the upside, the next obvious target is going to be that 600 strike. So we'll be watching very closely tomorrow to see how the market opens up. We are now above the zero gamma exposure level. And so this is going to be a really interesting zone here, back in positive territory, but still below this trend line. I think tomorrow and Friday could be make or break trading sessions for the market.
Thanks, Anthony. We know historically the option expiration week is bullish, and we're definitely seeing a lot of put option premium killed this week so far. I wanted to look at the VIX, and I have the 4-hour Keltner channels pulled up on the VIX chart, and you can see we tested this upper channel. Actually, we reached roughly 22, and today we saw volatility really drop a lot. Basically, we're at 1611 on the VIX, and the lower Keltner channel is at 1536. Now the Keltners are still angled upward. So when the VIX gets back to 15, if the VIX continues to drop toward 15, we want to keep an eye on this trend line that we can draw back to December, which we've breached to some extent here. The VIX is not typically a very precise indicator, so it's not uncommon to see it overshoot to the upside or downside. If we go over to the gamma picture, we can see that 15 is an important area. It's a dealer cluster zone, and we rejected from this 20 area, which was also the upper dealer cluster zone. And with the VIX expiration coming up next Wednesday, we may still see some back and forth here, and we have a large amount of gamma negative strikes at 15 and 16 set to expire next Wednesday, with 20 being the positive. We'll want to keep an eye on this for potential reversal to some degree with the market having rallied.
Yeah, the VIX really got killed today, down almost 14%. Thanks for bringing that up, Sean. Next, I want to take a look at Tesla. Tesla, a big mover today, up nearly 7.5%, trading above 426 here in after hours. We mentioned this in our previous videos over the last couple of weeks. We bounced out of this lower dealer cluster zone around the 380 strike multiple times actually over the last several weeks, and finally got some momentum going. Now we're seeing big time gamma effects come in. This is classic gamma exposure behavior where price gravitates towards the largest net positive or negative gamma exposure concentration. In this case, it is the positive gamma exposure at the 450 strike. We also saw very noteworthy volume coming in at that 450 strike. Over 120,000 contracts were traded today at 450. So this is significant when you see that kind of volume trading nearly 5% higher than where the price of the underlying security is trading. And so because of that, we think there is substantial interest at that 450 strike. Like we mentioned, gamma exposure has been telling us that the 450 is going to be an important level here in the coming days and weeks. And so the move today being up over 7-8%, at the highs clearly is showing that market participants still have a big interest in Tesla at these higher strike prices.
Thanks, Anthony. I wanted to look at USO. It's been a while since we looked at oil, at least maybe a few weeks. I actually have the chart pulled up with weekly Keltners shown because price is so far above the daily Keltners on USO that I wanted to look for the next potential support and resistance areas. And you can see quite an interesting point that we're at here. We're almost tagging this upper weekly Keltner channel. I think it's too early to say if oil is, emerging from this consolidation that goes back to 2022. You could say this is one big cup and handle forming, but I think with this straight line move up, even if the trend does change, we're probably due for some sort of a retracement. The Keltners tend to do a pretty good job of indicating when we're in a trending environment, as you can see going back to 2021. This whole time, these things were angled, upward and to the right, and price tended to follow that trajectory. And, of course, we've been in this sideways pattern for this whole time. So nice move. It may be a little bit early. Let's take a quick look at what Gamma says. So Gamma is positive, and we have 82, which is a little lower. We're at, close to 85 now. You can see there's not really much positive Gamma above 85 worth noting, and we have this big cluster at 82 that's expiring Friday. We're way above the upper dealer cluster zone. We had volume today at 81. So I think oil is probably due for a pullback here. I'm not brave enough to short oil, but I would not be buying it here either.
Thanks, Sean. Another big mover today was Nvidia, up over 3%, now trading above 136 in after hours. As we noted in our previous video, we bounced off of our lower dealer cluster zone. As we've seen, many stocks are forming this same pattern and same structure in the options market. But you can see here bouncing off the 130, even going back into December, we had multiple bounces off of this 128 to 130 zone, which is our lower dealer cluster. Now coming out of this, we did get above 135. This 140 GEX concentration has been the predominant focus in the options market for the past 6 weeks. And you can see how many times we've actually come up and bounced and tagged that level multiple times, even breaking up towards this 150 strike. So ultimately, if we can get back to that 140 here in the coming days, 150 could be the next target. It's a little speculative as of now. We are playing this in our Geek portfolio, which you can check out in our community Discord. And we actually rolled our position yesterday to give it just a little bit more time, but we are targeting a move between the 140 and 150 range. So this is a big wide range anywhere in here, and we will have some nice profits in the coming week. So we have a positive bias based on the GEX data as well as the volume data that continues to come in here in NVIDIA. And if you guys are interested in learning more about our portfolio strategy and our Gamma Exposure dashboard, head on over to geeksoffinance.com. You can sign up, become a member, and get access to all of our tools and analytics. You'll also get access to our Geek University course, which is a 5-hour option strategy, volatility, gamma exposure, and our overall trading approach. This is included for free for all members. You'll also get access to our community Discord. We've got a ton of great traders in there sharing their own strategies and trades every single day. It's a great source of information. I'll put a link down in the description below for you guys to check that out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.